Okay, planning and operating variances. Let me first explain the concept of planning and operating variances, and then we start solving few problems on them. Okay, as far as planning and operating variances is concerned, what we are actually trying to do here is, there is a plan which is prepared on day 1 and there is a reality which happens in day 365. Now the plan says that I have to buy raw material at 10 rupees. This was the plan on day 0, to buy raw material at 10 rupees. Good plan, everything is fine. Now what has happened in the economy is that the raw material is sugar. Sugar was available at 10 rupees, great, but certain things happened in the economy. They've started restricting imports. The crop has become a failure, so the production is lesser. Because of that, this 10 has now become 20, closer to 20. The price of 10 has now become closer to 20. And what my procurement team did is, they somehow got it at 18. They purchased at 18. 10 was the original price. They have bought it at 18. Now if you look at 10 and 18, we will say that procurement team is inefficient, because the price variance is going to be adverse. It is going to be an adverse scenario because 10 has now become 18, not a favorable scenario in any way, because you have ended up spending more than what is needed. So it's an unfavorable scenario for the company. That's the conclusion we will arrive at. But the other way around, now my procurement team is arguing, saying that in the economy the price is 20 and I have purchased it at 18. How do you say that I have not done a good job? In fact, it has been a better job for me. Now to resolve this issue, you have something called as planning and operating variance. Now what does planning and operating variance says is that you start with a plan, but when you are implementing the plan, the things may undergo a change. So you cannot keep saying that I had planned this and let's work with this. So there can be a need to change the plan itself. So there will be a budget and there will be a revised budget. The difference between budget and revised budget is called as planning variance. So the difference between 10 and 20 is planning variance. The difference between 20 and 18 is operating variance. So operating is favorable. Planning, somewhere you went wrong on the planning side rather than on the operating side. So what they are saying is, you do 10 and compare it with 20. When you compare 10 and 20, that's called as planning variance. When you compare 20 and 18, that is called as operating variance. So for planning variance, the formula is budget minus revised budget. Budget minus revised budget. For operating, it is revised budget minus actual. This is what broadly we are going to see in this area. Revised budget minus actual. Clear? So planning and operating variance has come into picture because there will be times when you are implementing the budget, the things may undergo a change. When you did your planning, everything is fine. But when you are implementing, things have undergone a change. Somewhere you have to give effect to that. Clear? When I do a problem, you will understand it better. Question number 1, we'll do it later. Just a minute. Okay, let's start with question number 2. Go through question number 2. Go through question number 2, page 360. Okay, now coming to this question, they have given details of raw materials. These are the prices at which you wanted to buy, all of that is available. Then they say climate conditions proved disastrous, as a consequence normal prices for the fruit extract is 19, and exchange rate has led to sugar prices being going up by some 20%. They have given two details. Now whenever information like this is given, there is a reason for a planning variance to come into picture. Planning variance will come into picture not only for price, it can also come for quantity. They can say the original plan was to use 400 kgs of fruit extract, but because of change in composition they want to use 500 kgs of fruit extract for mixing purpose. 700 kg something they can mention. If any change happens, those are planning. If no change is happening, those are operational. Clear? Any doubts on this? Now working note 1, calculation of planning variances for material. Calculation of planning variances. Calculation of planning variances. Planning variances. Now my planning variances will come into picture only if some change is happening. If no changes are there, there is no concept of a planning variance. What are the changes they are asking about? Only the price undergoing a change, no quantity undergoing a change. Now when I do planning variance, don't look into actual data as of now. Listen, single material, multiple material, single raw material, multiple raw material, multiple raw material. Listen for some time, I'll tell you to note it down. SP into SQ, SP into RSQ, SP into AQ, AP into AQ. What are the four products? Fruit extract, syrup, pectin and okay. Now SP refers to the originally planned price. What is SP? 16, 10, how much? 33.2. Listen for some time, I'll tell you when to note it down. AP refers to revised budget. Standard is original budget, actual is revised budget. Standard quantity is original quantity, actual is revision in quantity. Don't get into actual data. I am telling you not to look at actual data till now. I am first seeing any variation in the budget to be done. So SP refers to standard price as per the budget. AP refers to standard price as per the revised budget. SP refers to, so planning variance is standard minus actual. Standard is original budget, actual is revised budget. Operating variance is revised budget minus actual. So standard is standard is original budget and your actual is revised budget. Difference of this is done and then you do the difference of the other two. Clear? Any doubts on this? Did we change the price of fruit extract? How much? 19. Any change in the price of syrup? 12. Pectin? Acid? Any change in the quantity composition? No. So I'm going to copy the same 400, whatever it is, 400, RSQ, SQ, everything is going to remain same. There are no going to be, there's only one variance which is going to come, which is the price variance. Other items are not going to be there. So AQ is 400, 700, 99, 1, 400, 799, 1, 400, 799, 1, 400. If they had mentioned saying that for fruit extract now we have to use extra 20% quantity, then AQ would have been 480. Extra 20% quantity is to be used. I am not looking into actual data till now, and that will come into picture only when I come to operating variance. I am just focusing on planning variance. Planning variance just says if at all there is a change in anything. So ideally I don't need RSQ and all in this, because there is no change in mix per se in the question. I've just now written it so that you understand it fully. So you can note it down. The basic thing is SP refers to original price, AP refers to revised price, SQ refers to original quantity, AQ refers to revised budgeted quantity. If at all any budgeted quantity you are undergoing a change. Complete till this. Do this and let me know the planning variance. This is uncontrollable. This is not in the hands of the company. You will see only price variance being there. Column 1, column 2, column 3 total is same. You will get the same total for the first 3 columns. That is the loss. How much loss will be there in the processing? Your input output ratio is 100 is to 97. 100 kgs of input will lead to 97 kgs of output. Is there any revision? Whenever there is a revision only I will come into picture. They have not given any data on revision. No, they have not said that the standard loss should now become 5%. If they make all those changes, then we will consider it. As of now, this is the data point. Your column 1, 2, 3 total will be same. 4 alone will have a different value. What's the total of column 1? 16 887. Third one is 19487. Difference between 16887 and 19487 is planning variance. Somewhere we went wrong in the planning is what the final conclusion. I cannot make my people responsible for this. How much is the planning variance? $2,000. Clear? Any doubts in this? Now we'll come to the operating side. Now when I come to operating side, you should think this as the plan now. The operating side, when you come, this is our plan now, and with that only we will have to work. Can we move to the operating side? Next, calculation of operating variances. Operating variances. Same set of 4 columns. SP is 19, 12. Now listen for a minute. SQ cannot be exactly copy pasted because it will depend on how much production has happened. That has to be anyway calculated only. Price will always be copy pasted between planning and operating. Whatever is AP in planning will become the SP for operating. That will be copy pasted. Quantity will depend on how much production has actually happened. So we'll see that in this question it will match, I think, but in many questions it may not. So then 19, 12. 19, 12, 33.2 and 200. What has been the actual prices? 18, 32.8, 95. Then copy the actual quantity, which is 428, 742, Any doubts on this? Any doubts? Next, calculation of RSQ, underline that. Calculation of RSQ. Calculation of RSQ. All of this is done in materials variances. What's the starting point? Total of AQ, RSQ calculation. Total of AQ in standard mix. Now to add the actual quantity. Standard quantity only is calculated with actual output. This is total of AQ. What's the total of AQ? One to 96. This will be split in the ratio of 400 is to 700 is to 99 is to 1. 400 is to 700 is to 99 is to 1. That is what is your RSQ calculation. 400, 700, 99 is to 1. Any doubts on this? Next, calculation of SQ. SQ is equal to actual output into input by output, actual output into input by output. What's the output produced? 1164 into 3% is the loss. 1164 into 100 by 97. 3% is the loss. You'll have to split that in the ratio 400 is to 700 is to 99 is to 1. 400, 700, 99 is to 1. Get the variances. Please complete the variances. The table is done. It's up to you now to complete it. Material cost is 1316 adverse, price 583 favorable, usage 1899 adverse, yield and mix 1559 adverse and 340 adverse. This is from an operating point of view. Earlier one was from a planning point of view. Operating is considered to be controllable. Planning is considered to be uncontrollable. You can't do much about it. Clear? Can we proceed? This is as far as material is concerned. On the labor side, have they given any changes saying that you have to use more labor, less labor, or anything on the rate side? No. So labor will have only operating variances, only the operating side. Any doubts on planning and operating variance for materials which we have done? Planning is budget minus revised budget. Operating is revised budget minus actual. Next, calculation of labor variances. Calculation of labor variances. 3 columns. SR into SH, SR into AH, AR into AH. SR into SH, SR into AH, AR into AH. What's the rate we wanted to pay? 32.5. Rate actually paid? 30. Let me know in case there are doubts. We have already done all of this, so I'm not explaining in detail. My focus was only on planning and operating. Actual hours is how much? 20. 20. Now the trickiest part is standard hours. What is standard hours? Standard hours. Please participate, whatever makes sense to you. Okay, how many units should give how many hours? Can you tell me that? How many units should give how many hours? One batch is equal to? How many units should give how many hours? Where do you get 1164? How many units should give how many hours? What is the link? I want your participation. Unless you are participating, I am not moving forward. Link between units and hours. How many units and how many hours? What is the link? 18 hours will, okay, 18 hours will lead to how many units of production? Standard cost data for a batch of jam are given. 18 hours will lead to how many kgs of output? How much? No, it's not 1200 kg of output. If it was 1200 kg, then my SH will undergo a little bit of a change. It's not 1200, but it is 18 hours is equal to 1164. How 1164 is 1200 minus 3% loss. The standard equation, I am not looking at what has happened in reality, don't get there. I am just focusing on this part. 18 hours will lead to summation of this minus 3%, because the standard loss in processing is 3%. So 18 hours will lead to 1164 kgs of output. 18 hours is going to lead to 1164 kgs of output. I am yet to come to the below part 1164 because that is also 1164. I am going to copy 18 here, but the standard equation is 18 hours will lead to 1164 kgs of output. How 1164? 400 plus 700 plus 99 plus 1 minus 3%. This is what the composition given by them. The composition according to them is 18 hours should lead to 1164 kg of output. Any doubts on this? SH you can copy paste as 18. Any doubts on this? Clear? Can we proceed? Now, if I look at the question, part 1 is answered, planning variances uncontrollable, operating variances deemed controllable is also done, mixture and yield variance is done, total variances for the batch is nothing but material planning variance plus material operating variance plus labor variances, all the cost variances, just add all the cost variances. If you are not adding the cost variances, you will have to add up all the individual variances, both are same thing. So, total variances for batch equal to MCV in bracket planning, material cost variance in bracket planning, material cost variance in bracket operational plus labor cost variance, material cost variance planning, material cost variance operating and labor cost variance. All these three have to be added depending on whether favorable, adverse, you do that and let me know the answer. Material cost variance planning, material cost variance operational, labor cost variance. How much the answer? How much? 39. Okay. Can you proceed? Any doubts on this? Let's move to question number 3. Managing Director of PTKLL thinks that standard costing has little to offer in reporting of material variances due to frequently change in prices of materials. PTKL can utilize one of the two equally suitable raw material and always plan to utilize the same raw material, which will lead to cheapest total production cost. However, PTKL is frequently trapped by price changes and the material actually used often provides after the event to have been more expensive than the alternative which was originally rejected. During last accounting period, to produce a unit of P, it could either use 2.5 kg of PG or 2.5 kg of PD. So one of the two raw materials can be used. PTKL planned to use PG as it appeared. It would be cheaper of the two based on a cost of 1.50 per kg. Due to market movement, the actual prices change, and if PTKL had purchased efficiently, the cost would have been these. Production of P was 1000 units and usage of PG amounted to 2700 at a total cost of 6480. Analyze the material variance for P by using traditional variance analysis, an approach which distinguishes between planning and operational variances. Okay, now they have given details about some raw material wherein they can use one of the two raw materials, PG or PD. What has been happening is they use PG, PD turns out to be cheaper. They use PD, PG turns out. This is what has been happening in the past. So MD says, let's not do this variance analysis itself. It doesn't make any sense at all. What is the point of doing variance analysis? Now, the plan was to use PG of 2.5 kgs at the rate of 1.50 per kg. That was the plan. In reality, this is what has happened. 6480 divided by 2700 is how much? 2.4. So I wanted to buy at 1.5 rupees. I ended up paying 2.4 rupees. If you ignore this line, just ignoring this line, what you do is traditional analysis. SP into SQ, SP into AQ, AP into AQ. That is your traditional part. Then we will do planning and operating. In planning and operating, SP into SQ, SP into AQ, AP into AQ. We'll first change the plan because prices have undergone a change, and then we analyze the operating variances separately. Clear? So working note 1, traditional variance analysis. Traditional variance analysis. Traditional variance analysis, 3 columns. SP into SQ, SP into AQ, AP into AQ. SP into SQ, SP into AQ, AP into AQ. What is the price at which we wanted to buy this raw material? 1.5. What is the price at which we have actually purchased? 2.4 into 2700. What will be the standard quantity? 2.5 kgs for every 1 kg of output. We have produced 1000 kgs. So 1000 into 2.5. This is your traditional analysis. Complete this. Then we come to planning and operating analysis. This is your traditional variance analysis which you have been used to doing it. We have done multiple problems on this. Now I'll come to the planning and operating part. Any doubts on this? Then planning and operating variances. Right, planning variance first. Planning variance. Planning variance. For planning variance, the columns are same, SP into SQ, SP into AQ, AP into AQ, SP into SQ, SP into AQ, AP into AQ. SP refers to the original planned price, AP refers to the revised planned price because something has happened in the economy. AQ and all doesn't changes. SP refers to original plan, AP refers to revised plan. So originally we wanted to buy at 1.5. Listen for some time. I'm writing into 2500 itself because that is not going to undergo a change. 1.5 into 2500. What is the current purchase price of this raw material? Whatever raw material you have selected on. 2.25. So 1.5 was standard price and 2.25 is actual price. 2.25 is actual price. Listen, what will happen is this 2.25 will become column 1 when you do operating variance. So difference between 1.5 and 2.4 is the overall variance. In that 1.5 to 2.25 is planning, 2.25 to 2.4 is operating. The balance part is operating and the first part is planning. Clear? Able to understand this? Any doubts on this? 1.5 was the originally planned price, 2.25 is the revised planned price. SP refers to original budget, AP refers to revised budget if at all you are revising the budget. If no revision happens, there is no planning variance at all. Clear? Any doubts in this? Do this now. But he has already decided on. I'll come to it in some time. There is something else to be mentioned here. Complete this, then I'll tell you a bit of further breakup will be there. $1,000 to 2.5. So traditional is 2,700. No, I didn't understand your doubt. No, this is planning. I'm yet to come to operating variance. Planning variance says SP refers to original planned price, AP refers to revised planned price, SQ refers to originally planned quantity, AQ refers to revised planned quantity. They have not said any changes on the quantity to be consumed. 2.5 kg has to remain 2.5 only. I cannot now change 2.5 as 2.7 because that is what has happened. That plan has not been changed. You will come to it and see. Now listen. Now when I do operating variance, what is going to happen is these two will remain exactly as it is. Sorry, SP will change, but this AP into AQ will remain same. And this figure you are seeing, no, this will become SP into SQ. So technically what happens is 3750 minus 6480 is traditional variance. 3750 minus 5625 is planning. 5625 minus 6480 is operating. You are just splitting that into two, stating some is because of planning side and some is because of operating side. Now listen, this 1875 has to be further split. There is a further split on 1875. I'll explain that alone. Now listen, two parts to 1875: controllable, non-controllable. Normal understanding is planning is uncontrollable in nature, but in this question they could have controlled it to some extent, because after the prices had changed, I should have ideally changed to the other raw material. I should have ideally changed to PD rather than continuing with PG, because prices have changed, and after price change, an ideal thing the company should have done is shift to the other raw material, because that is a cheaper alternative. Now listen, this controllable and non-controllable is 1.5 minus 2. 1.5 minus 2 is non-controllable. You can't do anything with it, because anyway it would have gone up to 2 into 2500 kgs. What is controllable is 2 minus 2.25 into 2500. Planning by nature is uncontrollable, but here there is some bit of controllability also there, because I should have ideally changed to the other raw material. So 2 minus 2.25 into 2500 is controllable in nature. 1.5 minus 2 is non-controllable in nature. 1.5 minus 2.25 is the overall variance, is the overall planning variance. Any doubts on this? The planning by nature is non-controllable, but in this case 1.5 minus 2 is non-controllable, 2 minus 2.25 is controllable. Complete this and then we complete the operating part. Again I am telling you, if a budget changes, only AQ will change. If there is no change in budget, you will understand in the next question anyway. Clear? Can you proceed? Any doubts on the planning part? Calculation of operating. See, you will have to not look at the entire data when you are doing planning. Just look at if there are any changes in the pricing or any changes in the quantity given. That is a planned quantity, not stating he has consumed more or consumed less. Next, calculation of operating variance. SP into SQ, SP into AQ, AP into AQ. Now, when it comes to operating variances, SP refers to what is the revised plan the company has fixed. So, what is the revised price we have agreed on now? 2.25. I can make my purchase team responsible only for the difference here, not for 1.5 to 2.4. 2.4, 2700. I'm writing the same 2700. I'm not changing that. So, this 2700 continues in operating variances and SQ is 2500. Planning plus operating will put together become the traditional variance answer. It's not that it's going to change. Put together it will become the traditional variance answer only. Obvious. Yeah, overall. That is 855 plus 18 whatever number 1875, no, 855 plus 1875 will match with the 24 some number which we had seen. It's basically the variance doesn't change. The variance is only 2480. I'm just giving it different names. Why do I give different names? I don't want production team or the purchase team to be responsible for the market changes. They can't be held responsible for what has happened in the market. So, they will be told that you are responsible only for that 450 rupees extra or 405 rupees extra which we have paid. Clear? Any doubts in this? Can we proceed? Any doubts in this part? So, just a minute. So, this is what it is. When you do planning and operating variance, the difference between original and revised budget is called as planning. Difference between revised and actual is called as operating. So, if any changes in budget happen, then only you will have a planning variance coming into picture. When I say budget, they should prices have gone up, or the quantity to be used is going to be more, less, any change in design which has happened, laborers have become more efficient, so I have to charge this price. Anything of that sort is called as planning variance. Balance is your operating variance. Go through question number 1. Okay, coming to this question, they have already given the variances. They just want us to show how these variances have been computed. They want us to calculate that. And there is something called as factor analysis for casual factor analysis for sales variances. Depending on the time availability, we'll complete part 1, that is calculation of your planning and operating. If time permits, we'll also complete the casual factor analysis. The variances have already been computed. What are the changes they are talking about on the planning side? If at all any changes they are talking about. I want your participation. Please participate. Any changes, permanent changes, or any changes which they are talking about, what they have mentioned? I wanted to buy raw material at 8 rupees. Is the 8 any change they have made to the 8? They have made change to 7.5 per kilo and they have purchased it at 7.9. Difference between 8 and 7.5 is planning. 7.5 and 7.9 is operating. Difference between 8 and 7.5 is planning. 7.5 to 7.9 is operating. Similarly, I wanted to use 1.5 kilos. Now I have made some composition change which will require 20% additional material. The difference between this 1.5 and 1.8 will be technically called as planning variance. 1.8 to actual reality, what happened? That is your operating variance. So that is where these variances are there. If you look at the question, they have said material usage there is a planning, material price there is a planning, and wage rate also. The revision variances are planning variances. These other variances are your operating variances. In between this casual factor is there. What is to be done with casual factor, I'll explain in some time. Planning variances are revision variances. Your operating variances are your operational, normal or other variances. Similarly, for labor, what they mentioned is the original standard wage rate overestimated the degree of trade union pressure and was 20 paise higher than the rate subsequently agreed. So what has happened is, originally I said 4.5. The revised rate is 4.3. That is what is agreed. Difference between 4.5 and 4.3 is planning. 4.3 and in reality 4.6 is operational. Difference between 4.5 and 4.3 is planning. 4.3 and 4.6 is operational. Working note 1, material variances. Material variances. In that, planning variances. Planning variance. Now when I do planning variance, please don't look into actual data, you will get confused. So 3 columns, SP into SQ, SP into AQ, AP into AQ, SP into SQ, SP into AQ, AP into AQ. What is the price originally fixed? 8 at 2 places. Efficient prices? 7.5. Don't get into actuals. There is going to be a confusion the moment you look into actual data. SP refers to original plan, AP refers to revised plan. Originally, I wanted to consume 1.5 kilos. 1.5 kilos. My revised consumption is 1.8 kilos. How 1.8? Extra 20% consumption. Have they given any budgeted production? Don't look into actual. Budgeted production, anything is there? How many units they wanted to produce? Not actual production. 4,000 units. because I'm just revising the budget as of now. So let's not get into actual. Listen. So my standard quantity is 4,000 into 1.5. Every kg, every unit I have to use 1.5 kg. My actual is 4,000 into 1.8. 4,000 into 1.8. I am yet to come to your actual performance. Don't see there. The moment you see there, your confusion will start. 4,000. So I had asked only two questions. Is there any change in the price? Yes, 8 became 7.5. Any change in consumption? 1.5 has become 1.8. So this is 4,000 into 1.8. Clear? Any doubts in this? Put a total and get these variances. Then we will do the operating part. 4,000 into 1.5 and 4,000 into 1.8. Calculate and see whether it matches with what is given in the question. We are first revising the budget, then we will come to the actuals. Clear? Material price variance is 3,600 favorable. Usage variance is 9,600 adverse. Can we proceed?
So why we are calculating the planning rate?
They've asked us to show no. Prepare detailed figures showing how the material and labor variances in the operating statement have been calculated. They've already given all of that. They want us to show how it has been calculated. I didn't get your doubt.
They are asking in the operating statement.
Operating statement means this is the statement. This is the operating statement. It's not operating variances, it's operating statement. Clear? Next, operating variances. SP into SQ, SP into AQ, AP into AQ. Okay, now listen for 2 minutes. Now you should ignore this planning, operating and all, take out of your mind. When you do the problem, you can understand that this was not there at all in the question. It was 1.8. This is what was there in the question. Ignore everything else and do variances in the normal manner. Standard price is 7.5. Actual price. Standard quantity will be calculated with the help of 1.8 kg per unit of output. Ignore planning, operating, everything. Just imagine that it's 1.8 at the rate of 7.5. So SQ will be calculated with the help of actual output. AQ refers to actual quantity consumed. SP refers to the original planned price. AP refers to the actual price. But that original planned price is now 1.8 at the rate of 7.5. Do this and then fill the table. 1.8 at the rate of 7.5. 1.8 at the rate of 7.5. Okay, one announcement, there is no class again on this Monday. I'm not in station, so next class will be on Wednesday only. Please do it. Unless you do it, you will not get the comfort. It's easy for me to complete it, but I want you to practice. Actual output. Any doubts on this? Can you go to labor, planning and operating variances? See, the broad rule is planning variance comes into picture when you change the budget, difference between original budget and revised budget. The moment the budget is changed, ignore the budget and work with the new budget, 1.8 at the rate of 7.5. Next, labor variances, planning part, labor planning. SR into SH. SR into SH, SR into AH and AR into AH. What was the originally planned rate per labor hour? 4.5. 4.5. We subsequently revised it to 4.3. Originally planned was 4.5, but we said that it was 20 paise higher than the rate subsequently agreed on. So 4.3 is 4.5 minus 4.3 is a planning issue. We did a wrong planning. 4.3 minus whatever is the operational issue. What are the actual hours? What is actual hours? If you tell that correctly, you have understood it. Otherwise, there's an issue. Actual hours. How much I want participation? Unless you participate, I'm not even able to guess whether you are understanding. Okay, any other answer? It will be 8,000. I told you not to look into actual data. Again, I'm repeating, not to look into actual data when you do your planning variances. Originally, it was planned to work for 2 hours per unit. They have not made any changes to the 2 hours per unit. Quantity 1.5 became 1.8, but this 2 hours, no changes have been made. So 2 hours will continue to be 2 hours. So SH is basically like this, 4,000 into 2. Same will continue as AH. 4,000 into 2, because they have not made any changes. If they make changes only, I can change the actual hours. Don't look into actual data when you do planning variances. Planning is the difference between original budget and revised budget. It is budget and budget, not actual. I am not even coming to actual. So into 8,000 into 8,000. So please be very careful. Planning means any change happening on the material price, labor rate, raw material quantity per unit, labor hours per unit, that only will be the planning side. Don't look into the actual data and confuse yourself. Is it matching with what is there in the question? 1,600 favorable. Then the last part, which is your operating part. Any doubts till now? Now when I do operating, please don't look into the original plan. Now it is 2 into 4.3. Just keep that in mind and do the question. It's like 1.5 into 8. Now it has become 2 into 4.3. Instead of 4.5 hours per unit, 4.5 rupees per hour, it has become 4.3 rupees per hour. Next question. Single labor, multiple labor. With idle time, without idle time? With idle time. In planning and all, idle time can't come into picture. So there I did not even ask this question, because I cannot say that there is going to be an idle time as a revised plan. So that is not possible. Now you do the operating part. Please do it. Let me know in case there are doubts. Unless you attempt it, you will not understand these things. $9,200 is what you are paid. 150 hours of idle time is there. SHS 2 into 4,400. Complete the sales. I'll take you through in the next class. On Wednesday, we'll do this casual factor analysis.